We talk a lot about digital transformation, but the real question is, can it actually hold up under pressure? Today, we're unpacking what reliable at scale means, from the pipes behind the walls to the borrower experience in the living room. Gentlemen, when you hear reliable at scale in mortgage, what does that actually mean to you?
Well, for me, I think it really means everyone is speaking that same language from origination all the way through closing and then even into investor delivery. No surprises. If we stick to that same specification, that same standard, everyone knows what to expect.
And I echo a lot of what David just said. I think what happens with me, especially working through this in the interoperability group, is that scale now has to be usable between organizations. Like, it's one thing to say that I can do it great, but if we all can't do it great, the ability for us to scale anything is going to be extremely limited. So, that's how I look at it. I look at that we have to, yes, reach and achieve that type of nirvana of perfection, but we have to be able to do that in cohorts with all the people that we work around with.
Love that. Well, David, Brian, thank you guys for joining this episode of MISMO Mic'd Up. David Garrett and Brian Pannell from DocMagic. DocMagic is a longtime MISMO member, partner, and you all were a sponsor at our most recent Winter Summit. So thank you for that. Much appreciated. And Brian, to your point, you guys are active inside of MISMO, inside the work groups. We'll probably touch on some of those topics today, but I want to get kind of right after it. And Brian, I'm going to tee this up for you to start. Let's start under the hood, if you will. And, when you think about reliability, what does that look like at the infrastructure layer? And then kind of a second question there, what typically breaks first when systems aren't built for scale?
Sure. And from my standpoint, we have, multiple products. There's folks who want what we call a on-premise solution. So they want to be able to handle that within their own shops, and they already have their own ability to do those types of things. There's a lot of us that also provide technology that's in a SaaS model. So we have to have support for that as well. And where we really start to see some nuances to that is everybody has a different type of requirements for what that may be. Us as a vendor, we get caught up a lot in these vendor risk assessments and things that we have to do to make sure that we're meeting all the scalability things that people are asking for, and we're meeting all the redundancies that people are asking for. And it gets kind of difficult when you start looking at your tech stack, especially when you're supporting multiple different types of applications within it, to make sure that you're hitting all those types of things and you're hitting them all the time. And it is really interesting because you'll get one thing and you're like, okay, well, this is my questionnaire. I filled it out one way. And then you'll get another questionnaire a week later and they're asking different questions. And you're like, okay, it'd be great if we just had one type of thing. We actually at DocMagic have what we call our complex or full vendor analysis report that we put out, and it has all the SOC 2 compliance and all those types of things that are included with it, because those are things that people are asking for. And when we get so redundant in answering that question, we at least have to come out with something that's consistent and provide it to all.
I love that you guys do that. My question, prior to joining MISMO 6 months ago, I spent 6+ years in the vendor tech partner side of the business, and we built a similar kind of artifact and document, and I would say it was accepted like 1 out of 5 times. But I'm just curious if you see something similar, or are you finding that your prospects, your clients, even in the renewal stage, are using that artifact?
Most of them are. I mean, majority of them, there may be 1 or 2 questions that they're asking outside of the loop. Even then, they're easier to answer. We've talked to a bunch of folks about, when we came up with this. So we have a full, complete version, and then we have this light version that we can send out. So it's really about how in-depth the folks are going to be. And you're still going to find someone who's going to require you to do a whole litany of other things that you have to do in continuity management and things like that we've completed. And it becomes something that we stand behind, of course. It's just, it takes time away from the other activities that you have to do at the company, which is one of the reasons why we came up with this standard package, because at least we know we can get that far out. And if it's okay, then we'll step back. But if it's not okay, then we got to pull somebody off of something to answer the questions that they have.
Let's look at this from the life cycle lens, and really the loan life cycle. So, how do you view reliability showing up across the loan life cycle, especially in view of your product set? Because you guys span a pretty wide spectrum of the loan manufacturing process.
Right. I mean, receiving that data at the point of origination, that same data will live all the way into that closing. And when we're looking at creating an e-note, right, it's the same data. So if it's not consistent and reliable at that beginning stages, you don't really stand a good chance once you get to the closing. And oftentimes, and what we try to do here really is give people a window into that from that very first initial disclosure phase. When you come in, we need to tell you, based on what you've given me for that loan data, how E can you be? Because if we don't have that data up front, it's not saying you can't do an e-closing down the line. You can't have that e-note, but you need to know. And you can make choices there as the lender in those beginning phases that will really set you up for success and make sure that by the time we as the doc provider create that e-note for you, once it's signed and into that vault, the lender can rely on that because it's not just us creating it, letting the borrower sign, putting it into our vault. Most of the time that e-note is going to start traveling around throughout, our other trading partners. And that's really where, if you can trust it in the beginning, then you can trust it at the end.
So I love that we went right into the how E can you be, right? Because it's pretty timely. I think I just saw some statistics and some reporting. I think it was from MERS that we're starting to see right around 15% of MERS registrations, having e-notes, which is it's kind of sad that we're in 2026 and we're saying that's great, right? But relatively speaking, it is great, and we've seen like this accelerated adoption in the more recent calendar year. And that, to me, that screams borrower experience. So I want to kind of ask another question around infrastructure, but from the borrower lens. So, is it fair to say that borrowers don't necessarily experience infrastructure problems from a lender vendor perspective? They actually experience life cycle failures. How do you think about that?
I mean, I definitely see where you're coming from with that, right? It's when we look at a borrower, their interaction with all this is when they're going to sign those documents. And when you're talking about an e-close, and yeah, I'm going to jump right into the deep end because that's where this all lives. But as a borrower, you're looking at a RON closing, remote online notarization. And as part of that, a lot of those laws and requirements around that come with knowing who they are. So while the data behind all of this can be perfect, there are still issues out there, right? It's not uncommon for a borrower to either not have enough publicly available data to do KBA, and so this is where the borrower is going to kind of see any, I won't call them breakdowns in the process, but hiccups. And it's just with where we are today and how these closings have to happen to meet all the requirements, that's really where that borrower is going to see the friction. And where we strive, and I know all of our other, people in the industry out there, they're trying the same thing. You're really trying to reduce that friction as much as possible because that borrower experience is everything. If that's not great, borrower's unhappy, lender's unhappy, vendor's unhappy. And yeah, it's something to be wary of.
Yeah,
it's interesting that you bring up KBA, right? And I just had a kind of a real life experience as recent as yesterday. I was dropping my daughter off she was going to a spa for some service, and no idea that they required an ID of her, but they did, and she didn't have it with her, right? And so it's like those little things, and I thought about, okay, when this appointment got set up, shouldn't they have told her that you're going to need these things to check in? And I think the same would apply in the case of, preparing for a closing, a RON closing. The lender, loan officer, whoever the client management representative is, are they doing their job in really preparing and setting the right expectations with that consumer?
Sure.
Definitely.
Yeah, and I want to add on to one of the things that David said that I think is you guys have been talking through. Gone are the days that people are actually downloading applets on their computers, right? No one's doing that. You're not distributing software anymore. And gone are the days that we're not meeting our consumers where they are. I'm an insomniac, so there's many times that it's 4 o'clock in the morning. I'm like, oh, right, I just remembered something I had to do. And I'm like, great, let me get my phone and type it in real quick or do that. And I'm assuming in the mortgage process, people are like, well, let me check this now. I don't know people's work hours. I don't know whether or not your schedule is you're a shift worker and you happen just to be home between 2 and 6 p.m. Or you happen to be home in the middle of the night. That may be when they only have access to these types of tools. And if they're not available, they don't have the ability to say, well, wait a minute, let me call somebody in the morning and try to figure this whole thing out. That becomes a bad experience. And if you're not meeting them where they are, we're talking about that almost in every industry, then you're not conducting anything of value to folks that we have out there.
Sidebar question on the, how can you be from your visibility? You guys are one of the market leaders, certainly in this space. Where do you still see adoption challenges? For some reason, I don't think it's the consumer as much as it's the lender loan officer that's still kind of the hurdle here.
Yeah, I would agree with that. Partly, and I'll let David respond as well. Where I think it is lenders aren't, end users, they're just not educated about what their options are, right? If you tell me I have to go somewhere and sign something, I go somewhere and sign something. I want the house. I'm doing whatever you tell me in this list. It's if I go ask my parents, hey, what did you do? Yeah, we went to go sign this down. So it's like, okay, so I know I'm doing this. And I've done a lot of work in states that have attorney states. They're attorneys all the time. And they're like, well, it's not about the closing. It's about my future relationship with them. So I need them in my office so I can share the pens with them. I can talk to them about their grandkids. I can say, okay, is there a trust that we may need to set up? So they're looking at that subsequent business from there. And it's not to what I hear from them is it's not conducive to us to be in this type of relationship that's electronic because you're not seeing me. I'm not shaking your hand. I'm not doing the niceties of things. You're not leaving with a gift basket. You're not doing those types of things. And it just kind of leaves the borrower in a state point of, well, I got to stay where you are. And we thought with COVID, hey, here's a rush, and then we're going to start doing all these other things, and it's going to push the industry. And actually, what it did is it allowed for people just to come up with more creative designs. The design is there. We can do this all electronically. We can do a Ron close. We can do all that. But instead, let's do all these other things that are out there. Like, let me have one of you in the office. You sign something, you leave. Somebody else, I have to clean the whole entire office, and somebody else comes in and signs a piece of it. And it just kind of got to a not convenience, but it just got to it. Here's something that we were used to doing, and if we're used to doing it, we got to expand the signing ceremony. Let's just do that instead of making it easy.
And kind of related to that, I know that some of the lenders we work with, they love that idea of an electronic closing, but they want to keep some sort of human interaction. And that's where iPin comes in, right? You can do that in person to have that relationship, at least to a point, but still keep everything electronic so you get all those benefits of having that e-note, having all those other documents electronically signed. So you get that. One other kind of area of apprehension around the lenders that we see, and I'm happy to see that that's decreasing to a point, is they may not know who they're going to sell that loan to when they're closed, right? So they may not be completely confident in doing an e-note. They're not sure if that investor that they choose later on is going to take that. So that is getting better, though, as more and more adoption and just all the work that we're all doing to try to get the word out, that is helping. Right? Yeah. It's not as scary as it used to be.
Yeah, I would definitely, putting my former lender hat on, I was at Flagstar for, almost a decade. And, Flagstar, to its credit, was one of the kind of, forerunners on the E side, right? But we struggled to drive adoption from our customers, the lenders, for the exact reason you just described, David. They didn't always know the loan was coming to Flagstar, at closing. And so I agree with you. I think we're getting to a state where there's probably more investors than not today that are accepting it, which is a good thing. And there's a whole different episode on the economics around getting to a state of full E, if you will, for the lender, but we'll save that for another episode. David, I want to talk about what you all see as the most common fail points when you look at a tech stack, right, across LOS, POS, doc prep platform, closing, et cetera. Are there some common identifiable fail points that you see, and are there suggested kind of remedies to avoid those?
There are probably. So I'm heavy into the integration side here at DocMagic, and one of the biggest things that we see is, any of our trading partners, whether that be an LOS or a point of sale system, even, they'll say, "Hey, we're going to send you a MISMO file." So that's great. We're pretty big in this world with MISMO. We love it. That's what we prefer. And then we'll receive the file, and it's MISMO-esque. And so I think one of the biggest challenges we have is just really helping them understand that specification, it can be viewed as strict, but it's that way for a reason, right? It's kind of what we were talking about before with the reliability and just the confidence and knowing what you're going to get. And so that's kind of, from my perspective with what we do here, that's probably our biggest challenge. Now, granted, the MISMO specification, it is very flexible. It allows for just about anything, but that expectation is there that they stick to the specification. It needs to validate as an XML file, right? And when working with customers and partners that may not fully get why it has to be that way, that's where we see that challenge. Because if the data is consistent from what we intake initially, there are no problems downstream. But if we're having to do workarounds and try to shoehorn some data that looks a little like MISMO into something else, then there will be problems.
Yeah. Is there like a specific place where you see those integrations or handshakes tend to break down? Is it when somebody is kind of going off the rails a little bit, going rogue in terms of appending data?
Right. They've tried to extend it in a way that is very unique to them. And that's one of the things we really try to educate them on is, while you can do that and it works for you and whatever individual trading partner you've been working with, you will likely have problems trying to use that same format and specification down the line with any other partners. Going with the tried and true specification from the beginning helps them in many ways that they may not be aware of from that starting point.
And really everything we're talking about is really around this idea of being able to scale a business, right? So I'm gonna fire off some rapid questions at each of you. Brian, I'll start with you. From your perspective, what's the biggest myth about scale?
Ooh, great question. I think what a lot of people get back to, and we're a doc provider, right? So it's big for us. And what Dave's talking about with the actual data that comes as a MISMO file, we can do any product that you want to do in a smart doc. And I think that's where a lot of people get kind of stuck, is they're like, well, it's only my conforming loans. It's only this. It's only the ones I'm going to sell to Fannie Mae or to whatever investor that it may be. And they get kind of caught up in, well, this isn't all my business. So, it's great for this one small line of business that I have, but it doesn't meet everything I need for everything that I do. And if I have bifurcated processes, then I'm not going to be willing to do it. So we get a lot of, well, I did the one, and then the one that I got that shows that I can do a press release on it, and it shows that I'm doing it with these investors, or it shows that I'm pledging it to the Federal Home Loan Banks. And then that's about as far as they go. And then everybody's like, well, why didn't you keep going? And they're like, well, wait. But at least for us, we can tell people we do smart docs all the time. If you want to do a smart doc for a different product, do a smart doc for a different product. If we don't have somebody to sell it to right now, and I think that's where some of the growth is coming from, because I think a lot more people are comfortable with portfolioing some of their loans, and they're finding aggregators that will at least do those types of loans for them. So it's just finding that business opportunity on the back end to make it is that liquidity, I guess is where we're really kind of going towards. Once they find that, then it's like, okay, well, of course I want to do this, because the process is undeniably simple. The getting on board is undeniably the smallest part of what you have to do. It's the long term. What am I going to do after it gets in my front door? And after it's in my door, then now I have to be able to use it with other folks. And again, MISMO does a great job of giving us these formats, but as we all know, the flexibility of it gives us kind of yin and yang about whether or not it's too flexible or not flexible enough. But it's something whereby we can at least have a starting point, and that starting point allows for David and his team to say, okay, Brian, here's now 7 different types of smart docs that we're doing. How can we get this out to the public and say, okay, we're supporting these types of things?
All right, David, your turn. Biggest misconception about integration? Like, what do you still see as the biggest misconception about integration anywhere in the process?
Probably the biggest misconception is that if you have a specification in front of you and you have developers that can code to it, that you are good to go and you don't need anything else. Because you can know that specification inside and out, but if you don't know the business behind it, if you don't understand how your loan data can fit into that spec, then you're going to only be able to get so far. And that's really where a lot of the challenges come, is that people say okay, I see this, I know how to read a schema, I know how to create an XML file, but yet you're not quite sure how all of these assets and liabilities are going to relate to a borrower from inside your origination system all the way into that MISMO file. So that's where our challenge comes in.
All right, I'm going to give you guys the last question here for our episode. Each of you can answer this one. If you could fix, and David, we'll start with you. If you could fix one thing across the industry, what would it be?
I would love it if everyone would use the same version of MISMO.
There it is. That's the mic drop moment.
That would make my life so easy. I understand the reasons for not doing it, but man, that's my dream.
I love it. That's a good one. Brian, what about you? What's that one thing if you could fix it, you would want to fix across the industry?
I think we're fixing so many things that we're starting to address. I think it's still, and I've said this hundreds of times in other conversations, and you said it earlier, there's still 80+% of this market that's untouched. And I think if we attacked it together, we'd be much more effective than, trying to pick off the people who are doing it, because unfortunately we know who does eNotes today, and it's easier to have someone who's already using it and try to sway him to a different product than it is to find somebody brand new and bring him in, because we know it's a multi-year process usually for most folks. But I think if we just had a unified, not necessarily approach, but a unified front every time these comes up, I think that would excel much more. And I think that's why part of the interoperability design in the first place was we needed a referee. I mean, we literally got down to situations where like, this is between what you interpreted and what I interpreted. And it became, well, I have more eNotes that look like this, so therefore you got to move to my way of doing it. Or I have more of this than you do, so you got to, I have a bigger investor, you got to move to my way. And I think what we, not necessarily that we're losing, but we need to keep building on, is that ability to say, we need eNote adoption. Ron is great. I love Ron. We all love Ron. I love eNotarization. I love all those things. But we can get to eNotes and we can get much quicker. And we don't have to worry about acceptability and everything else if we just focused on it and get it out there. And I think that would then turn the table for a lot of the other things that are slowing it down.
Yeah, I think on that one, to me, it's always about follow the money. So the economic, right. I think the more we talk about the economic benefit, and economic benefit can come from a bunch of different reasons. It could come from higher quality, less repurchase risk, all the stuff that happens, right? And so, I think we just have to keep kind of pounding the desk around the economics, the economic benefit of this, and eventually that, everyone's chasing that, that basis point here, that basis point there. So there's real economics in the process, and we just got to kind of keep yelling it and screaming it until people get it at scale. So
agree.
Well, guys, I appreciate you joining me today for MISMO Mic'd Up. As always, I love learning from the experts on this podcast. We at MISMO, we appreciate the relationship with DocMagic. not just from, a membership and a sponsorship, but from your willingness to roll up your sleeves and be involved in the community, in the work groups, and truly advancing the industry at large. And so thank you all for doing that. And again, thanks for joining me today.
Thanks, Brian. Appreciate it.
Yeah, thank you.
See y'all.
See you guys. Bye.
Bye.